Hey folks, Dan Frio here, the rate update. Today is October 5th, 2020. We're in October finally, and it's freezing here in Chicago. So that being said, what happened to rates today? You're not gonna like it. It hasn't kicked in yet. Our rates really haven't moved today, and I'll go through the rates with you here in a second. But the MBS has got clobbered, and they're back in range where I predicted. So don't go away. I'm gonna go over that next. Stay tuned. Hey folks, today we saw a big rise in stocks, and that was, things are weird. I mean, just things are weird. It's 2020, so let's just keep it at that. But the stock market rallied over 400 points. The president has corona, and God bless him, I wish him well. But the bond market got clobbered. And I can't figure out just why. And I go through every report that I can possibly find, and I can't figure out what caused it. So the only thing I can think of is between the president, getting corona. Normally in a normal market, we would see bonds rally because of the uncertainty. We wouldn't see the stock market rally, but go figure there. The talks with Mnuchin and Pelosi in regards to a federal stimulus plan, that went nowhere today. So basically, there's really no reason for the market to do what it did. So let me go over what it did, and we'll take it from there. MBSs, that's what we follow here on this channel, and that's, people ask why that, because most times when you talk to a mortgage advisor or somebody, they're like, let's watch the 10-year Treasury. That's going to tell us what's going on with mortgage rates. Wrong. Absolutely 100% wrong. The one tool or determinant of what's going on with mortgage rates is mortgage-backed securities. This is a bond that trades every day and determines, or it's the biggest factor when it comes to mortgage rates. Okay, that being said, this number right here represents what's happening to the price of the bond. As the price goes, like in this case, as the price goes down, rates go up. Okay, red is bad. Red means rates are going up. The bigger that red number, the worse it is. Green, we love green. And the bigger that goes up, the better rates get. So that being said, we saw a big move in the market at 25. And it opened the day and it was way down. And then we came down to about 2. Look at that. And then at the end of the day, we crashed again. And I can't figure out why. You go through the economic calendar for today. Basically, the Dow was up 465 points. The only thing that happened today, and I'm going to go through this, and I follow the charts, and I show you these charts every day and tell you, here's my thought. Go back, and you'll see me say, we're going to trade right in this range right here. Okay? That's the range I say that we're going to follow. Where did we end right now? Right where I told you we were going to be. So if you go back and watch my videos here, I said we should be in a range of right here. And so we've locked. If we didn't lock you back here or in this range, you're most likely locked right now because we keep hitting this resistance level and we keep stopping. Look at all these. That's telling me we hit bottom, and rates are only going to go up from here. Why? There's supposed to be a stimulus package coming out. That's great news for the markets. People are going to jump into stocks. The election is around the corner. I don't think I'm not going to cast my vote here on YouTube, but I think we know. I won't go there. Kind of know who the president might end up being, and don't think that's going to be a shocker. Hopefully not for anybody out there. The economies start coming back a little bit. Employment numbers are in line to where they should be. Inflation's in line to where it should be. I have a lot of people that I know in logistics, and they're getting better and better. And I also see a lot of manufacturing orders starting to come in. So I think we've hit bottom, unless we hit the Corona 3 with the influenza season and everything else. If you see that, everything's out the door. But if not, I think we've hit bottom, and pigs get fat, hogs get slaughtered. If you're with me, you didn't get slaughtered. You're locked in, and you did very well. News for the day is nothing here. The economic calendar for the week, really nothing here. Federal Chairman Powell's going to speak. Who's Federal Chairman Powell? Well, he's the head of the Federal Reserve. This will and can move the markets. The FOMC, basically that is the Federal Reserve. They're going to come out and tell us what they've decided to do in regards to interest rates. Nothing expected there. And jobless claims start to come in. I don't think we're going to see a shocker there. Here's some conflicting news. If you watch this, MBSs are down 25, so you're expecting rates to go up. If you follow my channel, that's what we would expect. It basically happened later in the day, and I think a lot of banks and lenders have held off on this, thinking it might come back, rally back, and basically balance itself out. That's what I'm thinking. I'm gonna say we should basically be stagnant right here. This is basically the sweet spot where I'm saying we should trade for a while unless some major news comes to push the markets. So this being said, you should see, well, rates should stay stagnant or maybe move up a little bit. Well, the reports came out, and again, they came out about midday, and they're saying rates are down 2 basis points. So I don't care the duration of this, but they're saying they're down. Today's rate is 2 basis points better than where we were a day ago, and delta is the difference. So there is a 2 basis points BPS decrease, and that's these lines around here. So you take 2 basis points off of that. So 2.89 plus 2 is 2.91. That's where we were on Friday. A week ago, we were 3 basis points lower today than we were then. These numbers, take it with a grain of salt. I didn't see anybody lower their rates today. And we're 75 basis points, so basically 0.75% lower today on 30-year conforming rates than we were a year ago. All right, Jumbos is 61 basis points. FHA is almost 91 basis points. So basically, FHA and VA, you're 1% lower than where we were last year, basically. The news for the day: delinquencies declined, but there's not the whole story. There's pressure on markets, volatility picking up. Again, nothing here is new. Delinquencies, I'm trying to make this format a little bit different. I'm trying to just give you information on what's going on with rates. So bear with me. That's why I'm trying to fly through this. I actually have just hired a videographer. It's going to come in every Thursday and do professional videos for us. So we're going to be posting one phenomenal, outstanding video a week. But I am going to do the rate update every day, and I'm going to make it kind of brief, short, and let you know what's going on there. So realtors, mortgage advisors, financial planners, you guys should be watching this. And you can tell your clients every day, here's what's going on. Here's what you should do. So delinquencies have slowed down. We're not out of the woods yet, guys. So that's that. Stock market, Trump might be getting out of the hospital. Don't know if that's a good idea. I would suggest he stay in there. I'm not his doctors. Better safe than sorry. The Dow up 465 points, 1.6%. Let's go to the greed index. And I'm going to go there right now. Let's see if I can find that. And let's see where we are. I think we are at fair value. Yep, we're at a fair value there. So we're all okay there. Everything is good there. So now let's get on to where are rates today. We're going to start at the top. Basically, what I'm breaking down is a $250,000 loan. And the variations are going to be, what is that credit score? It's right here. What is the loan to value? Loan to value is loan amount divided by the value of the property. That is right here. And I'm going to break down conventional, FHA, VA, and jumbos. So right now, today is the same rate as we had Friday. At a 740 credit score at 80% loan to value, we have a 2.875 rate with an APR of 2.95. If you go down to a 700 credit score, it's 3.125. A 660 credit score, 4.125. Now you get it, hopefully. If you call in and I'm like, hey, what's your credit score? You always hear me on here, get a second opinion. You send me that second opinion over, you get a loan estimate or a fee sheet or whatever you do get from the other lenders. And the one thing I always ask you is, what's your credit score? Your loan estimate is going to give me this information. It's going to give me your home address. It's going to give me the value of your home. It's going to give me the loan amount. It's going to give me if you're locked in or not. It's going to tell me if it's a purchase or a refinance. It's going to give me the rate, all the fees. What I don't know is what your credit score is. So I have a sponsor of the show, Credit Scores, plural, creditscoresandmore.com. You can go to there, go to the website. It's a free scoring system. Hit step one. Step one, it's free. Just click through it, take it 2 minutes, and it'll give you a score. Let me know what that score is if you don't know yours. But if you're off, look how different these rates can be. Bear with me 1 second. If you say, Dan, my credit score is a 700 or 740, and it comes back at a 700, I might quote you 2.875. I might have to increase that to 3.125. I am not baiting and switching you. I'm just using the numbers that you give me is what I give you back. So data in is only as good as data out. All right. So there's 3 different variations when you're looking for a mortgage. We call it a purchase if you're buying a house, a rate and term, which if you're only trying to refinance your current balance to a different rate or different term, or you're looking to cash out, you're pulling out money. So if you're pulling out money in this situation at a 740 credit score with a 75% loan to value, again, all these are, the loan amounts are always 250. I keep that consistent, but what these variances are, they change on the rate or the credit score and the loan to value. So at a 740 credit score at a 75% loan to value, rate's 299. 700, 3.375. 660, 4.625. Look at there's a 1.5 variance or 1.75 variance in these two rates based on the credit score. So that's what I hate is when somebody calls and says, Dan, what's your rate today? There's more to the story. Okay, so let's get on to FHA. FHA, there's normally on FHA loans, we're doing purchases or the client is looking to refinance their current balance. And we do those, it's called a streamline. So if you have an FHA or VA loan and your rate is over basically 3.5, let's talk, let's do something. The reason being is you can refinance as long as your credit score is over 620. You have no lates in the past year. It's a pretty simple process. We can just take your current balance, refinance that into the new term. You're going to skip 1 or 2 months. We don't need to prove your income and we don't need an appraisal. Pretty simple. We just get the documentation. We take your current loan amount, refinance that into the new loan. And that's where we're at. So those also, a 740 plus credit score, 2.75, 720, 275, 680, 275. 620, 375. So a lot of times people will ask, here's my score, here's that. I put you into the program that makes the most sense for you. I'm not trying to drive you into a program. I don't make any more money if I put you into one or the other. So what I try to do is say, you might want to go with an FHA loan. Some people come back and say, I don't want an FHA loan. I don't want that kind of loan. What's it matter? Let's say if you have a 680 credit score, I can get to 2.75. What's the difference between that and if you go up to here, your rate's 4.625? Look at the APR. You might have you have an APR of 4.7. The APR down here is 3. Which is cheaper? Okay, so you're looking for money. We want to get it as cheap as we can to you. Let's go to VAs. VA, the rates are the same as they are with FHA. A lot of lenders, it's not. With us, they're identical. Same credit scores, same interest rates. The nice benefit of a VA loan, you can go 100% if you're looking to buy a house. You can do 100% if you're looking to refinance and pull out cash. So let's say you have some student loans, you have car loans, some credit cards, you ran up some debt, you're like, I'm buried, but I got equity in my house. Why would you pay 25% on your credit card when you can pay a 3.75 rate on your VA loan or 2.75? Look at your credit card statement. I can almost assure you it's between 18 and 25% interest rates. So then the next question you might come back is saying, you know what? Well, I don't want to stretch that out over 30 years. Nor do I want you to stretch it out over 30 years. But you used your credit cards for a reason. What's that reason? Well, because you're not making enough money to satisfy your spending. So we got to do something here. But my job isn't to get you into more debt. It's to structure that debt to make it make sense. So we can pay off all these credit card bills, consolidated into one big payment. That payment I've got 3 or 4 deals right now that we're doing exactly that. Their payments are decreasing $1,200 a month. Now we either one, put them in a range where they can afford everything and they don't really have to spend on their credit cards anymore because we just freed up $1,000 a month. Or what I tell people to do, send in an extra $500 on that mortgage. You'll probably pay it off 10 years early and just blow the rest of it. Or put it in savings if you want to be a good steward of your money. So that being said, let's get back to the rates. So there's the rates on those, and our jumbo rates are just crazy low. I just quoted out a $2.6 million loan about an hour ago. The rate was 3.25 with an APR of 3.25. So here's my rates. 1 million plus, 780 credit score with a 75% loan to value. Rate is 3% on a 30-year fixed rate, guys. 30-year fixed rate. APR 3055. 760, 3.25. APR 3.25. Why? You have no costs. 740, 3.375. APR 3.39. 720, 3.37 with an APR of 3.39. If you have a jumbo loan out there, you're on an ARM, get rid of it, refinance it now. Where rate's going to be 2, 3, 4 years from now? Guys, we just hit rock bottom on rates. If you don't take advantage of this now, you're nuts. So that's where we are there. So that is my rate update for today. So what I'd like to ask you to do is, here's what I ask people to do on a daily basis. Get a second opinion. Please get a second opinion. So what do you do? Dan, what do you mean by getting a second opinion? You're out in the market right now. You're either buying a house, refinancing your rate and term, getting a streamline, getting a VA streamline, you're doing a cash out consolidation, and you already have a quote from somebody. Send that quote to me, and in a second, I'll show you how to get that to me, that information to me. Email it to me, or go to my website and apply. I'll get right back with you and say, here's what I can do. In most cases, we are beating everybody on rate and fees, not just one or the other. We're beating on both. I had 2 quotes in today. One was 3.125 with $9,000 in fees. I was 299 with $895 in fees. That exact same program. Watch these keywords when you're talking to a mortgage advisor or a loan officer. Don't settle for, the only out-of-pocket expenses you have are $200. And then you get your fee quote, rate sheet, loan estimate, whatever, and it's $9,000. Don't be fooled by your only out-of-pocket expenses. I don't give a crap what your out-of-pocket expenses are. What are your costs? That's what we want to find out. So here's the best way to reach out to me and or work with me or one of my advisors. Let me get you to our website right now. You're going to go to the rate update. So let's get in there, therateupdate.com. And this is going to pop up. All right. You can do a few things. You can hit apply now. I have 12 loan officers. You can pick them right here. I got 3 new ones coming. But if you're working with a specific loan officer, pick them right there. If not, just hit my name, Dan Frio. So my name is Dan Frio. I do the rate update every day. I've been in the business for 33 years, and I have a whole team of loan advisors. If you don't get me, but you want to deal with me, trust me, guys, I'm in the background. I look at every application. I look at every credit report. I look at every rate lock, and I also watch programs that we lock you in on. And I make sure you're put in a perfect scenario. If you want to reach out to me, the best way to do it, again, my name is Dan Frio. You can email me at dfrio, F-R-I-O, at preferredrate.com. If you'd like to call in, get a hold of me or one of my mortgage advisors, you can call the 800 number we have is 844-775-LOAN. That's 844-775-5626. Follow me on all social media. I post all this stuff. I post newsletter every day. I post the rate update, everything possible. If you're like, Dan, I just need to get this ball moving, hit the apply now button, get a free quote, or hit one of these if you're looking to buy a house or refinance, and it'll automatically launch you and get the ball rolling. So that is it for today, guys. God bless. Take care. Be safe. I'll see you tomorrow. Same time, same place.